So I'm going to talk about the Geelong market, why we bought there. If we got our property around the mid 400s, that would be a great buy. We ended up negotiating with the agent for 448,000. They changed their mind last minute, and the agent called me and said, hey, this property has come back. This is estate, so the owners want to sell quite quickly. The property manager said we could get 450 per week as well, so rents were good. We locked in the deal at 448,000. Everyone talks about buying an investment property, but what does it actually look like from start to finish? So today, I'm going to walk you through a real life deal, one that I did in Geelong recently, from all the way from market selection to how the property was sourced, and I'm going to take you all the way to settlement. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then go to my website propertyframeworkbuyersagency.com.au and book a session with me there. I'll take you behind the scenes for a real deal I did for a client who wanted to buy in Geelong. So I'm going to talk about the Geelong market, why we bought there, the suburb data, look at the data metrics, why this was looking good. I'm going to talk about the property itself, how we assessed that property. We're going to talk about the building and pest inspection results, how we negotiated, and then we're going to go all the way till settlement. So this is actually going from the beginning till the very end. I'm covering everything here. First of all, why Geelong? Why did we go to Geelong? So let's look at that. So I've got data from Rent Plan here. So this shows that the output for Geelong, 48.2 billion, that's massive. 125,000 jobs. The GRP, as you can see here, has been accelerating. So it has been moving up quite fast, which shows that the economy is doing quite well. If you look at the population growth has been steady. There has been a lot of interstate migration also from Melbourne. If you look at the unemployment trends, which is very important. So I'm going to go into this unemployment trend chart. You can see here, in 2017, unemployment in Greater Geelong was around 6.3%, and that has been dropping, and now it's sitting around 4%, which is just above the national average. So unemployment trends are still looking quite good. What are the projects that are happening in Geelong? So there are a few major things that are happening in Geelong. So I've got four of them here, four of the big ones here. So one is the Geelong Women's and Children's Hospital upgrade. So that's a massive $500 million upgrade. We've got the Geelong Conventional Centre upgrade, which is another $500 million. Then there are things like the hotel and commercial office spaces in the Geelong CBD area. That's coming up. So that's $500 million investment again. So we're talking about places like Cunningham Place, Yale Place, that's going to come up. And finally, we have rail upgrades, which was just recently completed in 2024. It's about a $900 million project. Okay, so some big ticket items here for Geelong, which would create more jobs and further boost that economy. Now, let's look at the suburb data. Now, the area we chose was a suburb called Whittington. So I'm going to load up the suburb data here. So this is data from Hashtag. Let's look at this. So I've got Whittington here. Let's look at the price change first, right? Whittington was moving up in value from 2016. So over here, it's moving up in value, kind of peaked around 2022. And over the last 3 years, it's been dropping in value, about minus 7%. So it's dropped by minus 7%. Okay, median prices here are around 512,000. There are some signs showing that the market has turned, okay, and this area is starting to pick up. Let's go through that data here. Before that, let's look at the socio score. It's got an ERSAT score of 1, so it's a lower socio area. About 44% renters, so about 56% owner-occupiers, which is still quite okay. If you look at the affordability is sitting at 40 years, which is just slightly on the higher side, but still within acceptable levels. Okay, now let's look at the stock on market data here. So stock has been declining over the short term. So you can see that drop happening here over the last few months, especially since the last year onwards. That drop is quite significant, the stock on market drop. The days on market also has been dropping, over the last 6 months or so. There's a sharp drop here that we can see. If you look at the inventory, yes, the inventory has also been dropping over the last few months. And then finally, the vacancy rate. So vacancy rates are super tight, sitting at under 1%, which implies a very tight rental market. So yes, this was a market that was declining for the past 3 years, but the data here is suggesting that the market is turning, and I'm seeing similar on the ground as well. Like properties don't really sit on the market for too long. We do have multiple offers. There's a bit of competition on the properties, so the market is definitely turning. And as the interest rates cuts come along in the future, then this market is going to kind of accelerate forwards. Whittington was chosen because the client's price point, we wanted to keep it kind of under 500,000. So we had to select a property which was under 500,000 as well. In Geelong, realistically, you can only buy in 3 suburbs under 550,000. So Corio, Nolan, and Whittington. So the area we chose was Whittington. Let's look at the property itself. So this was the property we sourced. Okay, this was the one we got. So I'm not going to show the address of the property for client privacy reasons. So this is the property, brick home. Okay, on concrete stumps. The property needed a bit of work. We were aware of that, like carpets, curtains, a bit of cosmetic work here and there. So I told the client, keep aside some money. As long as you have some funds, we can get this at a great price. When we looked at comparables, we saw that in Whittington, so this property, for example, number 21 Townsend Road in Whittington, this sold at 525,000. And if I look at how this property looks, okay, this is actually a property that's in good condition, fairly good condition. It sold for 525,000. So if we got our property around the mid 400s, that would be a great buy. Okay, so this is a good, it's not a great property, but it's in fairly good condition, and it's sold in the low 500s. So our property, the one we bought, we ended up negotiating with the agent for 448,000. So that was the price for which we secured the property. So a bit of a backstory there. The property went under offer to someone who kind of wanted to go unconditional, place an unconditional offer, and then they changed their mind. They didn't sign the contracts. They changed their mind last minute, and the agent called me and said, hey, this property has come back. This is estate, so the owners want to sell quite quickly. Did you have a client who wants to place an offer? So I got my client in. We negotiated 448,000. This was listed on the market between 440 to 480,000. So we got it kind of towards the lower end of the A range at 448,000. But we were aware that there was work needed on that property, maybe 10-15K of work, but we still saw value because comparable properties were selling around mid 500s, 525,000, like the one I showed you. So we still saw value on this property because it was a 600 meter square block of land, a rectangular block, 600 meter square, and it's a brick home as well. So we definitely saw value at 448,000. The property manager said we could get 450 per week as well. So rents were good. So we locked in the deal at 448,000. Let's look at some basic things about Whittington, the area itself. So Whittington is just located here, right, which is just a short drive to Geelong CBD, just maybe 5 minutes into Geelong CBD. Okay, we've got other suburbs like St. Alban Park, Newcombe, slightly better suburbs which are surrounding Whittington. Yeah, the fact that it was really close to the CBD was also kind of made it really attractive as well from a rental perspective and also a future growth perspective. Now, let's look at the due diligence on this property. So this is the property. Again, it's a quiet cul-de-sac kind of location. This is the property, 628 meter square block. It's a purely residential area. We don't see any industrial or commercial areas nearby, so that's fine. 3x1, 628. 1960 build. It's a brick home. Let's look at the owner-occupier percentage of 67%, 26% renters, and then 6.2% public housing. Yes, there was a bit of public housing, 6.2%, but it wasn't too high. At the same time, the price point, the affordable price point made this buy really, really attractive. And now let's look at this, the planning report for the property. So if I go to this, the property is located in a general residential zone. So that's fine. And then over here, we did see that there was a special building overlay on this property. And you can see this marked in blue. I called up the council just to verify what this was about. So this is not actually a flood overlay. A special building overlay here means that big rain or something like that and the drainage overflows, this is what happens. So this areas will be affected. So it's not like being in a flood zone, it's just the drainage overflow, which we felt wasn't a major concern. So we went ahead with the deal anyway. Okay, the property is not in a bushfire prone area as well. And there are no other overlays affecting this property. Once we got it under contract, I got a property manager to inspect that property. And this was what the property manager, this was the feedback feedback, exact feedback from a property manager. So this was what we saw. Range hood doesn't work. Movement cracks throughout. So we need a building inspection, of course. Aircon in the bedroom doesn't work. Cupboard in second bedroom has to be removed. The bedroom 3 needs cupboard doors. The barbecue outside has to be decommissioned and removed. Carpets have to be replaced, and property has to be brought back to life with a coat of paint. So yeah, as I said, the property needed work, and this was confirmed by the property manager. So clearly, if we were to do all of this, that'll be around 15 to 20K approximately. My client said he didn't want to go ahead with paint for now, just leave the paint for now, but he'll do the other stuff, which brought the work required to around that 10 to 15K. But we were well aware of this before placing an offer on the property. We went ahead with the deal and then went into the building and pest inspection. I think this is very important. We want to review the building and pest inspection results here. So I've got this table here, which was the building and pest inspection done on this property. Let's have a quick result on the summary of this report. No safety hazards found. We found one major defect. There is a minor defect. There's no live timber pest activity. That's good. There's no timber pest damage as well. Conditions conducive to timber pest activity, yes. That's quite common in older properties. And evidence of fungal activity and damage, yes, that was also found. There was no wood borer activity, and there was no evidence of a previous termite management program. So the first thing here, we wanted to have a look at the major defect and the minor defect. So let's look at the major defect. This was a major defect that was found, right? So it was that the internal flooring was not even in some of the areas. Okay, so he actually measured how uneven it was. So this reading gives a measure of that. So in some areas he's measured 9 millimeters. It's the flooring is uneven by 9 millimeters. In some areas, in another area it was 14 millimeters, 3 millimeters, 7 millimeters, and so on. So clearly, when I spoke to him later, he told me that this was an issue with the stumps, and that we would have to look at the stumps again, probably do some work on the stumps. Now let's look at the minor defect. So I've got the minor defect, and it says cracking evident to external brickwork. So we were starting to see minor cracks on the external brickwork. It wasn't huge cracks, but very minor. And again, this is linked to the uneven flooring. The stumps need a bit of work, and that has resulted in this minor cracking. So clearly, the work that needs to be done is address the stumps. We didn't pull out of the deal. Yes, the stumps needing work is an issue, but what we did before pulling out of the deal, I spoke to a stump specialist and asked him, hey, can you come and have a look at this property? How bad are the stumps? Can you see what needs to be done? And in a couple of days, a stump specialist came over to inspect that property. He had a look at that property and he said there was a bit of packing that was needed. Okay, you don't have to replace everything. It's just packing it up, packing the stumps up, and just giving them a lift so that the flooring no longer becomes uneven, and that should fix the issue. And this is the quote that he gave me. He gave me a quote for check, re-level, and packing existing concrete stumps using PVC packers. This is the quote he gave me, $4,950. Okay, so we knew the cost to fix the stumps. Okay, and of course, over the long term, with these concrete stumps, you'll have to maintain them every 15 years or so. So that at some point, my client would have to look at replacing the stumps if he wanted to sell the property at a great price. But for the moment, yes, what we needed to do was get this addressed immediately. So I went back to the agent, showed him the quote. This is what we need to address the stumps. If you can give us this quote, we'll proceed with the contract. Agent spoke to the sellers agreed, and we got a discount. They agreed to give us a discount of $4,950 or $5,000 at settlement. So deal proceeded. All right. And so pretty much that is the deal. The property manager did the final inspection. It was in the same condition that we saw it before. We got that $5,000, which the client will use towards that stump work and also potentially some other work which was needed on the property. He actually visited the property as well after settlement, spoke to the property manager, and got things organized from that perspective. So even if I factor in about 20K of work, 25K of work to do some painting, do the other stuff on that property. This property, once that work is done, would easily sell around $530, $540. So you immediately get an uplift of about $50,000, $60,000. So the deal made sense to me. All right, so that was the deal, guys. I hope you found this useful. If you got comments around this or had questions around this, put it in the comment section below and I'll make sure that I answer them. So that's all from me today, and I'll see you in my next video.